Capital raising on the primary market, post-listing requirements and securities issues in the secondary market. Corporate disclosure policy. The purpose is to ensure that communications to the investing public about a company are made in accordance with all applicable legal and regulatory requirements. Disclosure of policy in immediate public disclosure of material information. Listed company requires to make immediate public disclosure of all information. Secondly, policy on true public dissemination. Listed company requires to release material information to achieve widest possible of dissemination. Next, policy on clarification or confirmation of rumors and reports. Listed company requires to clarify the rumors as soon as possible if it becomes aware of rumors that will affect the securities of the company or shares of the investor. In addition, we have policy on response to unusual market action. Listed company take appropriate action when there is a fluctuation in price movement trading activity. Furthermore, policy on unwarranted promotional disclosure. Listed company refrain from promoting disclosure of unnecessary activities. Lastly, we have policy on insider trading. Insiders should not trade on the basis of the material information which is not known to the investing public. Listed companies has to make immediate announcements to Bursa Malaysia Securities Berhad for release, including information to avoid establishment of false market, fixing of books closing date, declaration of dividend, notice of meeting, change in management, and so on. Financial statement to be provided quarterly within 2 months from the end of every financial quarter. Audited annual accounts to be issued within 4 months of the end of financial year, and annual reports to be received by shareholders within 6 months at the end of financial year.
Now, for the capital raising securities, once a company has floated its securities and obtained a listing of its securities on Bursa Malaysia Securities Berhad, there is a broad range of alternative capital raising opportunities, whereby the shareholders and the marketplace generally can be approached to support further issues of equity, hybrid equity, and debt securities. A company listed on Bursa Malaysia Securities Berhad may choose to offer debt securities, including redeemable preference shares, and also warrants or other convertible securities.
3.2 Modes of issuing securities. A variety of techniques that companies which are already listed can employ to issue further securities. Public issues represents an issue of new shares for sale to the public at a price agreed upon by the issuer and its principal advisor. Right issues, issue of new shares to existing shareholders for cash generally at an attractive price, made to existing holders in proportion to their holdings. Made by a public listed company must be renounceable, not irrevocable written undertakings from shareholders. Expected to have a specified use for proceeds, utilized for investment in viable projects, expansion of production capacity, or loan repayments. Private placement, an issue of securities that are not offered to the general public, placed in the hands of parties that are independent, influenced by any issuer directors or substantial shareholders. Prices should based on weighted average market price of the shares for the past 5 days before placement. Issue of shares for acquisitions, takeovers, mergers. Companies that will often issue new shares in the exchange for the assets or the capital with another company. Often cheaper and quicker way of expanding operations. Public listed company is expected to negotiate for the highest possible value for its shares. Issue of convertible securities. Structured warrants settlement is by way of physical delivery. Underlying financial instruments is listed on Bursa Malaysia Berhad. Collateralized and non-collateralized structural warrants issued must not exceed 20% of share capital. Issue of shares from conversion of warrants and convertibles. Additional issue of shares to holders of other classes of securities. For example, warrants or securities. Warrants usually bundled together with debt securities. Warrant holder is entitled to buy proportionate amount of shares within a specified period at predetermined price. Convertible securities is form of deferred equity. Issuing companies are able to raise funds at the point of its issue. Holders is entitled to convert them into shares of the company. Issue of shares from employee shares option scheme. Some companies' employees have share option scheme. It provides employees with the option to subscribe for a certain number of shares in the company. Bonus issues, referred to as a capitalization issue. Adjustment to the accounts of a company. The company will decide to convert part of these reserves into issued capital. New shares will be issued and distributed without payment to existing shareholders.
Next, the debt securities and derivative products. There is bond, debentures, convertible loan stocks, and warrants.